Hey, it's Michael Saul, also known as Tiny. This is the market video for the week of February 3rd, 2014. Congratulations to the Seattle Seahawks. For those of you who have been following me or know that my Super Bowl pick streak remains intact, I have probably gotten, I can't even remember, the last 7 or 8 at least in a row completely wrong. I thought Denver was going to run away with this. I'm a huge Peyton Manning fan. I still am. I don't think one game is going to get me off, his fan page or whatever the whack it is. But I was really surprised that Seattle basically just manhandled them. And I stopped watching it at halftime, not because I was disgusted or anything. It was just incredibly boring. And I did not think that Denver had it in them to come back. Then somebody told me while I was working, somebody messaged me and said, did you see that? They just ran back the opening kickoff for the second half, and that was the end. So, like I said, congratulations to the Seattle Seahawks, and just another example of why I am thankful I do not bet sports anymore, because, wow. All right, defense wins Super Bowl. So what about defense in trading? Let's talk about that. Let's move over to the market now. So last week was more of a zigzag week than anything. You could see that here. We didn't really go anywhere that far. We were down early, then we snapped back Tuesday, down Wednesday, snapped back Thursday, snapped back Friday, finally got a fade, but that didn't hold. So we're congested up here on the S&P 500. The Dow looks like it wants to go to the 200-day moving average. The Russell also congested here. The mid-caps, same kind of deal, all right? And the Qs, they're holding better relative strength. They have this little higher low in place. Now, it's not that much better. I'm not looking at this going, wow, this is telling us that we're going to rally here. No, this isn't telling us we're going to rally here. Okay, these consolidations here are telling us that we should be getting a move sooner rather than later. On the upside, we have the short-term moving averages that are going to come into play as likely as resistance. And on the downside, depending on what you're looking at, you have the November swing low here on the SPY. On the Qs, you still have this December low on the Russell. You have these December lows here. On the diamonds, you have basically the 200-day would be next. Right? So there's all different. You can't just sit here and go, okay, they're looking at the end of 2013 lows or whatever. That's not how it's actually setting up here. All right, so, they're all different levels to watch. But I believe we're going to get a move sooner rather than later. And in my opinion, and of course, first things first, I'm looking for a move first. But if I'm going to put a directional opinion on this, I think that move is going to be down at least enough to trap those that missed this move so far will say, oh, that's it, we're done. 2014 is different. I think that we're going to move down. We're going to trap anxious sellers. And then I think from there, we could get a reversal and try to get the rally going. I do not think the highs are in. I do not think we go into a major downtrend from here. I still think we're in an uptrend, but the next bounce, and I don't really consider this a bounce, the next bounce we start to make with higher highs and higher lows, I want to watch very carefully, because if we can only test these highs and we can't get a nice fully participated rally, then that could lead to a deeper pullback. All right, so that's it. If you are interested in reading the newsletter, it's still free. We're getting ready to roll it out. I know I've been saying that, but we are adding a new column. We're going to do like a stock focus of the week, which is really going to be interesting. I think everybody will like it. You can still get it. I'll email you. I won't email. Sorry, I'll link you to the newsletter page. That feature has not been added yet, but we're going to add that and ETFs in the next week and a half, and then we're going to get ready to roll this thing out. March Madness. We're going to roll this out on March 1st. So you have a couple more weeks to check it out and get the information at no cost. So I tell you to take advantage of that. Also, you could sign up for the daily email. That's free as well. And, we hyperlink, not hyperlink you, sorry. We'll put that link in the description, and you'll also see it here in one of the call outs. Okay. So check both of those out. Have a great trading week, and I will talk to you in the next video.